Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's being shared today. If you want to follow me, it's at at finding_finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, sectors, looking for investment opportunities. I try my best on two fronts for everyone who's in the community. I try my best to find the companies, educate you at least partially on the company itself. If it's a new company I'm introducing, I will usually talk about it, go through it a little bit, give a little bit of a background. And then I try to give you guys great entry points using technical analysis and ratios. I try to get you in there early. I do not take advantage. It's not me positioning, having other people buy it, and then me offloading my shares. I would never do that. So um, I approach the markets. You buy when I buy. You have the opportunity to get in the exact price that I do, and sometimes I give you the opportunity before I even buy it, which is a lot of the times. I don't want any missed opportunities for members that are a part of the community. Special the coupon code that we have going on. You can get a 50% off the first month only on a monthly membership, and then you can get a $100 discount on the yearly membership, and you can always swap from a monthly to a yearly if you'd like to do that. So Axel Kibar, this is the Bloomberg All Commodity Strategy Index that is about to break out. One thing I want to make sure that you guys understand is that commodities are priced in dollars, US dollar. When we get a weaker dollar, which we are, and we could be breaking its uptrend channel, which I'll show you later, if that dives lower, this will go in the opposite direction. So this is a shoulder head shoulder. We call that an inverted shoulder head shoulder pattern, bottoming pattern. This is the bottom 23, 24, and 25. We haven't broken the neckline yet. It does not mean that the pattern's invalid or anything. It's just going through and most likely going to break the neckline here shortly. And when that dollar drops, you're going to see money rotation into commodities and precious metals. Now, the size of this move, um, we've talked about it a lot on the website. I've shown you guys Elliott wave analysis. I've shown you kind of where I think we're located. This is going to be a big one. This is the commodity bull market to write home about. This is the one you're going to tell your kids about. Hey, dad, hey, mom, how did you make it ahead in life? Well, there was this commodity bull market I invested in, and there was this crazy guy who taught me the three pillars: the market conditions and cycles, the ratios, and technical analysis to afford us the opportunity to be in the position that we are in today. So yeah, this is it right here, the break. So right below it, I've got rock bottom entries. The US dollar index is breaking down. Zoom out, the commodity super cycle is only just beginning. Each one of these big commodity bull markets occurred when the dollar dropped against other currencies. Then we get the money rotation flowing differently. From 2009 and 11, these two areas here, this is when technology stocks did incredibly well. It's when the dollar outperformed and money flowed into dollar denominated assets. Now, we break that 14-year uptrend line that we've got going on here. This is going to rotate differently. And being at the turning points like 2020 here and here, you guys just basically stole shares from a whole bunch of people. That's what happened. And if you're patient enough for this to break out, that's where the big money is made. Now, there's some other charts behind this. I'm going to show you just how big these patterns are. People know, they know that I have these sayings. Monster patterns change lives. Monster patterns change lives. The bigger, what is it? The what was it? The bigger the man. Now I can't remember it. The higher, the bigger the pattern, the higher in space. Whatever the heck it was. If you know the quote, put it in the comments section. I can't believe it just slipped my mind. The bigger the base, the higher in space. There you go. The bigger the base, the higher in space. It's the same thing. Dow gold equals 1 here. And he's talking about gold. So he says the gold secular bull peak could coincide with an upper rail hit over the next several years as it launches from an extremely bullish 45-year ascending cup and handle pattern. We could see $20,000 plus gold and consequently $500 to $1,000 plus silver. What does this mean? Why does that pattern exist? I can tell you why I think it exists. That was the declining interest rate environment is the cup and handle he has of this 45-year. This was a declining interest rate environment. Now that we're going into an increasing interest rate environment, money flows differently. At first, bonds underperform and interest rates go up because of inflation. That's the first step. The second step is that interest rates will hit a critical level. That critical level is somewhere around 4.5% to 5% in that general area. Before 4.5% and 5%, the stock market goes up with inflation. When you hit that critical level of about 4.5%, 5% on interest rates of the 10-year yield, we then see a disconnect where stocks and interest rates break apart. They move in opposite directions. So I think what Besant and some of these and Powell are going to try to do is they're going to try to hold interest rates below 4.5%, 5%. I think they're trying to do that now. And they're going to blame it on job numbers and unemployment. And they're going to do whatever they can to refinance the debt and keep interest rates somewhat low. The entire market is moving against them. The entire market wants to go up. They want interest rates to go up. They want gold and silver to go up. And I don't think they can stop this move. They can delay it. They can pause it. They can create events where maybe they can delay it another 6 months or a year or more. I don't think they can stop it, though, dead in its tracks. Tavi says the Fed preparing to cut rates while commodities are up 15% year over year is the clearest example of financial repression. Inflation is reaccelerating, yet policy is turning looser. As Dalio once said, cash is trash, never felt truer than today. Yeah, this is going to get crazy here, guys. When they lower interest rates, if they do that, you're going to see the dollar drop out of that big channel here. This is the channel, it's one of, and then there's a channel up here. So that's the channel. It's going to break that uptrend line and go down. It's going to send commodities and gold upward. These big patterns are all going to break. And this isn't going to be a small little move. It's going to be a big one. Spot VLCC rates at the highest point in 2 years. That's pretty high up here. Wow, that's pretty crazy. We've got Grady here. And these are, this is just evidence of what I'm talking about. A weaker dollar, increasing interest rates, or if they're going to lower interest rates, they're going to blow that dollar to the downside. You're going to see it in the charts. And you're going to see it amongst a whole bunch of different charts. So Grady says, been saying for years that capital is now rotating into commodities, posted these historical turns plus the breakouts in real time. The big ratio charts turns are already in. They are not coming. They're already in. And later on, commodities will be the only game in town. And what I just described it with interest rates going to a certain level and putting a headwind or pressure on stocks, and that has generally historically been around 4.5%, 5%. These patterns are all breaking in favor of gold. That's why it's broken down, outperforming Dow Jones. That means the market condition is coming into cycle, and we're in cycle. So coming into cycle is where the red circle is. In cycle is what we've already broken. So arrow placed when had second backtest unchanged. So what does this mean? We get a lot of choppiness from 2020. See how we went up in 2020 and then we chopped sideways? That choppiness was the market turning. That market was turning. So that we call that wave two. It's wave one for the big lift off from the bottom. And then wave two, we had all this choppiness. Now it's going to become a lot more apparent. Now we're going to start to see an acceleration of gains in the good old account. And this is going to start to move. This is the CRB index versus the Dow Jones, commodities versus US stock market in a falling wedge. The false breakdown was in 2020. That's the big first move. This is your second wave pullback, and then the big wave is coming here. Wave 3 is what we call it. This is where it's going to get real fun for those that are invested from these low areas here and here. These are the two best areas to buy the stock market. Sometimes you'll get like a shoulder, a head, and then this might have went up a little bit too high, and then you get a shoulder, which is real close to where we are today. And then we'll get a breakout. So I think this looks pretty enticing here. I love falling wedges. Here's another falling wedge, gold miners or the Huey versus the semiconductors stocks. That's already broken out. And we are starting to head higher. We have a 5,000% outperformance possible. What does that mean? It means the Huey goes up and semiconductors either go down or sideways, is my guess. And then we've got the TSX Venture versus the CRB index. So the TSX Venture, it's going to be a more volatile move than the commodity index. This is your smaller junior companies and stuff like that. So smaller Canadian commodities companies versus the commodities index. And you know what? We've been investing in these smaller Canadian companies. We are in the right location at the right time. We time this damn thing perfectly if you're part of the website down here. Now, this didn't happen immediately. We had a good 2 years to accumulate in here, year and a half, 2 years. And then we started ripping the 300, 400, 500, 600% gains that we've already gotten in some of the companies. They're going to keep going. This is going to be a big one. And the last big one was from back here, the bottom, where this little false breakdown, and then we went all the way up. We have a long way to go up. Here's another one. Extremely important to study this chart of Dow Jones Industrial versus Gold ratio. Much of my thesis is built upon this chart. I believe a breakdown from 45 years support is in our near future. A huge inflection point where a flood of currency will then rotate from stocks into precious metals. And here we are ready to break that trend line. We've had these big turns, commodity bull market, commodity bull market, commodity bull market, and we are entering a commodity bull market, and we're breaking the 45-year support line. Interest rates have already broken out. So that is kind of what we're looking at here. That breakdown and outperformance of gold versus Dow Jones. Scrolling down, URA versus the metal itself, what they call SPUT, Sprott Physical Uranium Trust. The number one most dominant uranium chart that there is. If you know, you know. And here it is, bottoming and breaking higher. This is going to be a big move. And I know people have been frustrated with uranium. You know what? It doesn't matter what you feel. We're going to throw those feelings in the garbage. I know that sounds harsh. You gotta conform to what the market is giving you. You need to adapt whatever emotional stance and fortitude and that you need to, because what is coming is going to be ridiculous. It's going to change your life if you are able to participate in it. I've been in it since 2020, and I'm going to continue to be in it until all these things unwind. And when they unwind, it's going to be ridiculous. The returns, the gains. But gains don't happen. The big returns don't happen in weeks or months. It's measured in years or a decade. That's the way it is. That's what you need to learn about playing the stock market. People calling for a top in silver don't see the big picture yet. That chart is ridiculous. It is ridiculous. This is China's largest silver producer and lead smelter. It's up 10% today. Now, when someone says, oh, there's going to be a short-term pullback, guys, screw the short-term pullbacks. Screw the short-term pullbacks. This isn't the time to be talking about short-term pullbacks when you're launching out of a pattern that looks like this. I mean that's like, I can't even think of an analogy. I can't even think about it. The big patterns like this, when they start to break, the way you mess it up is by losing your position. That is how you lose. You lose by losing the position. And if you lose the position, and what if this goes up dramatically higher? What are you going to do? Buy it back, buy back in when it's 50 to 100% higher than where you purchased it? Or, where you sold it? You think you're going to get back in? Guys, I screwed up last time. I screwed up doing things very similar to that. I'm not screwing up this time. I'm going to ride this damn thing. And there's going to be pullbacks. Can you time the pullbacks perfectly? No, you can't. And in order for the pullback to be worth it, you're going to have a 50% pullback because you're going to pay taxes. And if you have short-term gains, they could be a lot. So you need a pullback that goes beyond whatever taxes you pay to make it worthwhile to buy back in. So it's pretty tough to time that. So you're not going to get the perfect top and you're not going to get the perfect bottom. And if you get a 50% pullback and you don't get the perfect top and bottom, you may only be trying to get a 5% or 10% at best difference between paying a short-term gain. It's not worth it. It is totally not worth it to lose the position. Here's another one. Look at the size of these patterns, guys. God, do you just want to get kicked in the nuts and lose your position? These things are huge. It's a 13-year base. And we're just starting to break out. Could we get a retest on this? We could. But that doesn't mean I would try to sell it and time it. What that would mean is that I could maybe buy if we did get a retest, which a lot of the times we do. But I don't want to lose the position either. So SILJ completed a 13-year base in August, which featured an elegant cup and handle pattern. And the two-headed inverted shoulder head shoulder with the handle, I expect that we double the range as a starting point as silver moves towards $100 an ounce. I ultimately see silver in the 300 to 500 range with SILJ near 1 to 1. And he's got a price projection of like $67.25, $67.25. The big moves, guys, is where the big money's made. The big moves is where big money's made. If you want to try to make small money and pay a bunch of taxes, go for it. That's not me. Now, I've been riding SILJ for a while here. I've been riding it for a while. I got a pretty good entry on this. I'm going to keep riding. Patrick says, don't get mad. Gold and silver miners approaching an important top, which could lead to 40 to 70% correction over a couple of years. The timing is not quite here yet, but I can see it coming. Zone of greatest gains and shortest amount of time with least risk is mostly behind us, in his opinion. Do I believe that? I do not. I do not believe that. I think that we still have a long way to go, and I will show you why. These big patterns, guys, we are just breaking out of the big stuff. Could we get a pullback? Yes. Am I trying to time the short term? No. Do not lose my position, no matter what, is my opinion. And that's what I'm doing. Not going to lose a position up here when you're sitting on top of a pattern like this. These patterns generally create very big moves. And the hardest thing for people to do is to do what I just described, is to just sit in the position and do nothing. The history of gold mining stocks, there's a precedent for multi-decade breakout. First, there must be a multi-decade breakout. So by saying this, the Barron's Gold Mining Index is right at a breakout. Now, if we loop around, I don't care. We are about to break. Why do I think we are going to get a big move like this from the 60s into the 80s? Why do I think this is going to break and get a big move? Because of interest rates. Interest rates are the driver here, guys. And we are breaking a 1980 consolidation pattern. This will be gigantic. This is like going from 1935 to 1965. A 30-year chop gave us a big breakout. We are just about to break. Do I need to slap some people here? Too many people too busy smelling their own farts? What's going on here? This is what I see. These are imprinted in my brain. The 40-year decline in interest rates and the breakout of that trend line. This is coming, guys. Do not blow this thing. If you need help, for heaven's sakes, shoot me an email. It says, Tavi says, we've just returned from a week packed with meetings and mining companies and investors. And the most common question I heard are mining stocks in a bubble. Anyone seriously asking this hasn't lived through or studied a real mining cycle in his view. The ratio of junior to senior mining stocks is still 54% below its 2010 peak. If anything, I believe we're just at the beginning of this cycle. Right here, take a look at the chart, buddies. Get ready. I think we're in for a uniquely positive period in this industry, as juniors are just starting to outperform seniors ratio. Guys, the bull market is just turning. We're just about to go. Don't cut your nuts off at the beginning when you haven't even used them yet. All right? Like my Lord here, my Lord. And then I've got Canadian crude squeezing into a corner here because Canadian crude's going to rip it. And the mining, the producing companies, they've already broken it. They're already running. We're already positioned in the crap that's running. So yes, this is going to break out. And I think that I talked about this one last time. So we're going to end it there. That's all I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like, especially with the coupon code over there. And that's all I've got for today. I am going to be releasing, or have released, because I'm doing this before I released it, but Platinum Midweek Update. The companies I like, the things I'm looking at, the companies that I think are very attractive based off the technicals. So that will be uploaded to the website. You can see that right now if you'd like to join. All right, guys, that's all I've got. We'll catch you next time. See ya.